Welcome to the Real Estate Strategies Podcast. This is my co-host and wife, Danielle.
Hello, and I am going to be running the show today.
I know. This is a good idea, actually.
Yeah, well, actually what happened is we thought we had a podcast guest, and we didn't have one. So we were
we had one, but we're not sure we're going to use it.
Right, exactly. So we just decided, you know what? I'm going to interview Ken and put him in the hot seat.
It's actually not a bad idea. I as you guys know, I grill everybody else about what they're doing, but Danielle's like, what about you?
Exactly. So, well, I guess the main thing I think everyone wants to know is everyone knows what's going on with the economy. Interest rates are up. It's getting harder for, people that are in commercial loans to refinance. So what is happening with MC? Where are you at with your loans?
Yeah. Well, there's a few things. One is, Ross and I, this is our 22nd year in business. So, and you guys also might know or might not know that we only bought 2 properties in the last 18 months. And so now that doesn't mean we didn't try. So every week, every Tuesday, I have an investment committee. And on that committee, we have 7 people. And those people are smart. They're flying all over, looking at deals, meeting with brokers, literally walking properties, and we're looking at stuff. We're looking at packages. We're getting financing quotes, all that stuff. And we have underwriting going on. In fact, I was talking to Charlie the other day, our CIO, and he said, I go, how many spreadsheets have you done on this one deal? He's like, he said, I'm at 31. So the point is there's a lot of work going on. And that's frustrating for 18 months when Ross and I keep saying no, right? Like, because everything moves when you buy something. So for 18 months, we only said yes twice, and we bought a property in Arizona, one in Dallas, and those were in our fund. And so, but that also gives me a really cool insight as to the pulse of the markets, at least that we're in, because we're seeing all the deal. You can imagine any broker that is trying to sell anything, we're on their list. So we get all deal flow. We get hundreds of deals a week. And then we vet them, and they go onto this list. And then from there, they get underwritten, and then they go on another list. And so there's a refinement process. The one thing that the low-hanging fruit, in my opinion, is operations. So you can, you don't have to focus on operations as much, but when your cost of debt goes up, then what happens is you pull out your sharp pencil and you start to look at, okay, how can we reduce expenses even more? How can we really maximize our rents? And have we maximized our rents? Is our vacancy rate at all our projects the right number? And so you start to systematically go through all of those items. And there's a lot. You're basically repricing a property. So what I did was I looked at all of our projects. I went through every single one. And I basically looked at it as if I was buying it today. I said, okay, where should, where do we want the rents? Because there are situations when rents are going up, like in the last 3 years, they've gone up a lot. That doesn't mean that the property kept up. It just means that the market surpassed what the property was doing.
But I just want to know, like where you're seeing it at. Like, where are you seeing property tax increases?
Yeah,
where are you
we're
seeing insurance?
20 and 30% increases.
Which on a very large property is a much bigger deal than like a single family.
Well, just to give you an example, our property premiums are $3 million. So 30% is $900,000. That's a lot. So that $900,000 gets pushed down to all the different projects. So why is that? Like most of our stuff has not had big damages and big losses. Well, honestly, the insurance companies are subsidizing the states that didn't have big losses with the ones that did, just like you would do, as you're equalizing out your stuff. Like so these big disasters that you guys watch, like in Florida, let's say, for hurricanes or stuff, it affects everything. The one in Hawaii, that affects, there's real insurance companies that are in every city that are insured there too. And, they're taking it in the shorts. And so what they're doing is as my good friend said, he goes, you should get into the insurance business. I go, why? He goes, they never pay any premium or they never pay any claims. I go, what are you talking about? He goes, all they do is pay a claim one year and then get it back out in the premium the next. So they never really pay claims. They just increase premiums based on their claims loss from the prior year. So that's what's happening. And it's horrible. Imagine that. And by the way, this is actually affecting where people are buying, mostly on the commercial. So let me give you an example, specifically around insurance. Insurance costs in Texas were $700 or $900 per unit per month, let's say, okay, or per year. Sorry.
Per year.
Yeah. So let's just say, okay, in Arizona that might be 500 on the average, let's say. In in Florida, it's over 2,000. So if you want to buy a 300 unit building in Florida, you have to budget over $2,000 per unit for insurance. So you can go to Texas, it'd be half, let's say, right? And Arizona should be even less because there's actually more losses in Texas than there are in Arizona. So as you're looking at real estate and as you're looking at where to be, you really got to focus on that too.
So are there any new deals that you're working on?
That's a good question. Yeah. So everybody asks this, right? Because we've been super diligent. So now we're starting to see some of the properties we passed on in the last 2 years back on the market with cracks. You know what I mean? So we're putting together a distressed fund. We're putting together our plan, our deck, or our business plan, to be able to go out and rescue some of these projects. Maybe step in as on the general partner side, the limited partner side, even potentially buy these from the lenders. We've already looked at a bunch of these. So yes, I think again, you make the money when you buy, and it should cash flow on day one. And so we have one deal in escrow right now, and then as you know, we're in escrow on a company. We're buying a Billboard company as well. So I'm excited about that one. So yes, we are looking. We got this property is built in 2022 that we're in escrow on, and so hopefully it passes due diligence. Hopefully both of those deals pass due diligence. But it's exciting when everybody's here working their butts off, looking at stuff, finding stuff, and then bringing it to Ross and I, and we kill it. You can imagine. You got to keep that energy high for the next deal. And so everybody's really excited right now because we have a few deals in the pipe, and also the future looks very bright.
Can you explain the Billboard deals to people just so they know, or what you can disclose about it?
Yeah, I can't disclose too much, but here's what I do know. You guys know we've talked about billboards before. I've been in the space. I own them. I've sold some. I like them because they're set and forget type investments. If they can generate enough revenue on them to cover and produce a pretty nice cash flow, I think they're really, really, really good investments, especially if they're digital. Because imagine all you really need for digital is you just need a salesperson that can, do the graphics and put that stuff up on the digital board. So the deal itself is, I can't disclose all the numbers, but I can tell you this: it's a 20-year-old business that has been chipping away and buying billboards, and there's an opportunity to convert some to digital, which is a huge opportunity. Because imagine you start a billboard starts with two sides generally. Everybody kind of grew up seeing those. Well, the digitals is basically a flat screen in the sky. You get 4 ads per side, so you get 8 ads versus 2. So you quadruple your revenue, and now you have to upgrade it. It does cost to put new. They call it steel. You have to put new steel in, but it's exciting. It's a value add. It's a company that's done very well over the years, and they just want an exit.
Well, thank you for being a good guest on my show.
Thanks.
And also, if you guys want to ask Ken questions, we do have our Inner Circle membership. You just go to kenmcelroy.com/join now, and you are able to ask Ken any questions to follow up on the show.
Good chatting with you guys. Hey, wasn't Danielle chatty today?
Super chatty.